So we are live.
Shall we start?
Yes.
Good afternoon, good morning, whichever geography you're watching us from. A very good afternoon and good morning from Primebank family. This is the time again for us to present with our earning disclosure, and this time for Q2, or rather half-yearly financial statements of Primebank. As you all know, that we have made it a practice over the last couple of years now to come in front of you and present with our earning disclosure on a quarterly basis. At the same time, a very Eid Mubarak to all the Muslim brothers and sisters all around the globe, whoever is watching us with. I hope you all had a very good and peaceful Eid celebration with your nearest and dearest ones. Without much ado, what I will do is I'll request our Chief Financial Officer and Deputy Managing Director, Habibur Rahman, for H1. And before we go in, I'll just quickly introduce my colleagues with us today in the panel. I'll just go through the names as it appears on my screen here. To begin with, our Chief Risk Officer and Deputy Managing Director, Mr. Mohammad Tawhidul Alam Khan. Then we have our Chief Financial Officer and Deputy Managing Director, Habibur Rahman Chaudhry.
Hello.
Then we have our Head of Brand and Communication, Najmul Karim Chaudhry. Then we have our Head of Treasury, Mr. Sheikh Matiur Rahman. My colleague, Chief Business Officer for Corporate and Commercial Banking, as well as Deputy Managing Director, Faisal Rahman. My colleague, Head of Transaction Banking and Structured Finance, Mr. Shams Abdullah Mohaimin.
Thank you.
My colleague, Head of Consumer Banking, Mr. A&M Mahfouz.
Assalamu alaikum.
Head of Risk and Compliance, Mr. Mohammad Muddin.
Thank you, sir.
And Head of MSME Banking, Syed M. Umar Tayyab. So Habib, over to you.
Thank you so much, Rahul Bhai. And good afternoon, everybody. Can you see the presentations, Nazmul?
Yes, I can see that.
Right.
Sure.
So, right. Nazmul,
Sir?
we're facing. Can you share this presentation? Can you run through these presentations from your end?
Sure, sir. Sure. Just give me 1 minute. So it's in the screen. Can you see that?
Yeah, I can see that. Thank you so much, Nazmul.
Please continue.
Can I go to these forward-looking statements? Yes, this is here. This forward-looking statement is a standard disclaimer, and we understand that viewers are gonna read it out before making any investment or other decision based on today's earnings disclosures. Before tracking down the numbers, I would like to give a very brief overview of recent changes pertaining to banking sectors. And to start with, can you go to the next slide, Nazmul? Yeah. To start with, and you already know by now, the fact that central bank has recently announced monetary policy statement for fiscal year 2020 and 21. And in our view, this monetary programs has been designed in such a way so that these are actually expansionary for all growth support to revamp our economy. And recent significant policy changes are repo rate reduced to 4.75% from 5.25%. This policy stance will ensure the availability of less costly funds for banks. And then reduction of reverse repo rate to 4% from 4.75%. This has been done to rationalize policy rates corridor, I mean the gap between the repo and reverse repo rate. Then another change has been brought in this MPS, which is bank rate has been reduced to 4% from 5%. And this change has been brought out after long 17 years to rationalize this bank rate with current interest rate regime. Another significant change Bangladesh Bank has brought in its circular, which is credit risk guarantee scheme for cottage, micro, and small industries. Uh, the first slide, yeah. This program must boost credit growth to the sector where banks are shy to invest because of inherent credit risk associated to this sector and existing interest rate settings. And then loan classification and provisioning for cottage, micro, and small credits under CMSME. We believe that this should boost credit growth to this sector, as it may be very lucrative to banks to invest in this sector because of lower debt charge requirement as per a new policy. And then other changes already we know, central bank has introduced 360 days repo, then 9%, we are running our business under 9% interest rate cap, uh, and on lending, and then CRR has been reduced significantly to 4%, and ADR increased to 87% from 85%, and central bank has given a guideline to degrade loan classification up to September 2020. All these things has been done, and the indicator what we get is kind of to increase M2 supply in the economy, and make the market more liquid, and to revamp our economy from this COVID impact, what we are facing locally in Bangladesh. And I believe that the interglobe is facing the financial challenges out of this COVID. Now, if we go through the financials, our operating profit in Q1 was 162 crore, and Q2 it has been significantly come down to 86 crore, and H1 operating profit is 248 crore versus H1 2019 332 crore. As you can see from this presentation, in that in Q1 we are online with our budget, and we exceeded significantly Q1 2019 by almost 16%. But in Q2, because of regulatory changes in lending interest rate ceiling, and to some impact of COVID, this profit has come down by 25%. Now, if I explain the H1 operating profit versus H2 operating profit, Nazmul, can you go to the next slide?
Yeah.
From this presentation, you can see that our net interest income has come down by 175 crore, but our investment income has gone up by 122 crore. Our strategy was like, foreseeing the credit risk climate in the market, we have not grown our credit book significantly. Rather, we chose to increase our investment on risk-free instrument. And in this period of H1 2020, we have been able to increase our investment in risk-free instrument by 3,000 crore, which is almost double than what we have invested in Ace on 2019. And outcome of that is this incremental investment income of 122 crore. Our commission, exchange, and brokerage income has come down slightly by 21 crore. This is mainly because of ASON 2019, US dollar exchange rate has been changed from by around 55 basis points. But in ASON 2020, there was virtually no change of exchange rate till end of June 2020. That's why our exchange income in last year, ASON 2019, was relatively higher than what we earned in ASON 2020. Other operating income has come down by around 6 crore, mainly because of central bank's policy changes on service charge or account maintenance charge, and a slight impact of COVID on our trade financing business has contributed to some extent in this lower other operating income. And operating expense has increased slightly by 4 crore, but the underlying operating expense has significantly in ACE 1 2020 versus ACE 1 2019, because in this year we donated around 15 crore because of COVID and some others countrywide celebrations. And plus, because of COVID, we had to make provision of around 7 crore for employees of our bank who has been impacted by this COVID. So this is the explanations of operating profit of 248 crore, and our yield on advance has come down from 9.12% in September, then 9.15% in December, and it was around 9% in March, but because of regulatory changes, it has come down to 7.8% in June 2020. So the yield on advance has come down by 1.3%, and cost of deposit has also come down by around 16 basis point. So year on year, our spread has come down by 1.14%. Next slide, Nazmul. Though our profitability has been dented a little bit because of this interest rate raising changes and impact of COVID, our strategy was to maintain liquidity during this period. And from this AD ratio, you can see in June 2020, our AD ratio is 74%. This AD ratio is excluding OBU versus requirement of 87%. The other reason behind this lower AD ratio, because what I already told, instead of risky credit growth, we have invested our fund into risk-free instrument, which is government treasury bill bonds, which doesn't come in calculating this AD ratio. Next slide, please. On debt charge size, in ASON 2019, debt charge for loan loss or impaired asset was 92 crore, which is almost flat in ACE1 2020, is 93 crore. On tax side, provision for tax has come down significantly by 34%, because as you know, in ACE2 2020, we made lower amount of operating profit. And net profit after tax has come down from 99 crore to 62 crore, and net profit after tax has come down from 102 crore to 55 crore on consolidated basis. Next slide, please. And logically, EPS has come down as net profit after tax has come down from 0.88 taka to 0.55 taka, and on consolidated basis, it has come down to 0.48. Return on asset is 0.38% in ASON 2020, and return on equity is 4.56% in ASON 2020. But good thing is that our provision coverage against impaired asset has been increased from 71% to 129%. And our capital adequacy ratio is one of the highest in the industry, which is around 18.31% in ASON 2020. And cost income ratio has gone up slightly from 52% to around 60% because our income has come down in this period. And net asset value has gone up from 22.75 taka to 24.21 taka, and we see a 6% growth on net asset value in ASON 2020. On subsidiaries, we have incurred around 7 crore loss if we uh, sum up all these subsidiaries, and that's mainly because of very challenging capital market scenario we are facing in Bangladesh. Though very recently the market is bouncing back again, and marketing doing far better than before, and we hope we'll be able to you know uh, realize this loss to some extent in next quarter. Next slide, please. On pan bank deposit side, uh, uh, deposit uh, has been increased by around 971 crore if we compare with December 2019 number. But if we compare with June 2019 number, this deposit has been increased by almost 1,300 crore. And CASA has also been increased by 4.3%, and in absolute amount, it is 309 crore. And in June 2020, we have been able to exceed this 22,000 crore mark of deposit book, registering 33% CASA. Next slide, please. On lending book, as I said, our strategy was to grow with quality focus of lending book, not quantitative focus, and we have uh, a little bit degrowth on lending book. And as I said, we have diverted this fund from lending to risk-free instrument, treasury bill bond. So a slight degrowth on lending book, and non-performing loan percentage has come down to 4.21% versus 4.66% on actual basis. Uh, and our lending book at this in June 2020 is 21,028 crore. Can you go down, please? And as I said, our capital adequacy ratio is 18.31%. And the good news is that Tier 1 capital itself is 11.29%. As you know, the requirement of capital adequacy ratio is 12.5%, and we have this 18.31%. So it will give us access to increase our quality lending book because we have lots of spaces. Next slide, please. Thank you so much from my side, Rahel.
Thank you, Habib, for presenting us with the disclosure for H1. Um, what I'll do is, before we summarize on this, we'll just hear in kind of silo for each division of the key divisions of the bank. And I would request our DMD and Chief Business Officer Faisal to speak a little bit about what has happened during the H1 of the current year in corporate and institutional banking as well as commercial banking division. Faisal, over to you.
Thank you, sir. Assalamu alaikum, and a very good afternoon to the viewers. Just to give you a brief background on what we have been doing, basically we have been focusing on mobilizing the deposit. And in that course of action, I think we have been registering satisfactory growth of 9% in H1 2020. compared to H2 of 2019. If we compare it with H1 of 2019, then there is almost a growth of almost 17%. The growth primarily came from CASA and booking onboarding of transactional accounts. And during our this initiative, we have also managed to bring down the cost of deposit by 0.23 bips. One thing we must also take into account and also acknowledge that the corporate houses relied on Prime Bank's balance sheet strength. That also helped us to register this growth in deposits. Nazmul, next slide, please. Uh, in terms of loans and advances, the balance sheet more or less remained stagnant. We have not registered much growth here. This is primarily due to the low private sector credit growth that we have witnessed in the market. Our de-risking of the portfolio continues. So there, that also did not stop. We have also seen a drop in the trade volumes. Naturally, that had an impact on the balance sheet growth. Overall, we have about 700 crore taka of adjustment in the, that will stay in the previous slide. This slide, yeah, okay. We also have witnessed 700 crore almost adjustment in the long-term loan liabilities. And in absence of any new credit growth, that could not be replenished. So overall, we have seen the loan portfolio more or less remaining at the same level. Next slide, please. Overall export, there has been a negative growth in H2 2019, as we all know, due to the impact of COVID. This is primarily due to the order cancellations, the shipment deferments, extended payment terms, major buyers filing bankruptcies, and so forth. And there was also the pressure on the manufacturers to bring down the prices. So that also impacted the overall export volume. But the good part is it has now started to pick up. We have seen that towards the end of Q2, and we expect to see this number going up. In this regard, it is noteworthy to mention that during the same period, the country experienced 17% negative growth, where we experienced 13% negative growth. Next slide, please, Nazmul. Input volume also dropped substantially. As we have mentioned, there was virtually no expansions, capex, BMRE, so forth. Majority of the commodity prices also saw a dip during H1 of 2020. There were some one-off LCs which were opened during 2019 during the same period, which was not the case in 2020. So overall, import took a negative dive during H1 of 2020. But again, we have started to witness the numbers have started to grow, and we expect to see a better quarter going forward. Next slide, please. Primarily during H1, the later portion, the teams have been busy working on the stimulus packages under the Bangladesh Bank programs. So the good part is that under Bangladesh Bank's Financial Stimulus Fund, out of the approvals received, we have disbursed 71%. And we continue to disburse as and when we are receiving the approvals. Under the Bangladesh Bank Stimulus Fund salary, we have disbursed already April, May, and June salary completely, and partially of July. And after now, during this week, we expect to disburse the July salaries. It is noteworthy to mention that we have so far paid 41 factories covering 81,706 workers, out of which 54% are female workers. So that's something we have done. Under the pre-shipment credit refinance and under the Bangladesh Bank Financial Stimulus Fund for MFI and Agri, we are working. It is under discussion, and hopefully we should see some results coming there also. So next slide, please. I think what we have been doing overall, as our CFO, Mr. Habib, also mentioned, one of the key criteria is basically we want to bring the cost of deposit down. So we are relentlessly trying to bring the bring in low-cost deposit, primarily CASA. We are actively focusing on participation under Bangladesh Bank refinancing schemes. De-risking, as we have mentioned, the portfolio continues. We have been very selective in booking new relationships or new business. We are growing with our tested clients, taking into account the credit climate, and we continue to cross-sell for our subsidiaries, for our retail banking products, and so forth. So from wholesale banking piece, that's all from my side. I hand over to Honorable MD and CEO, Mr. Ali.
Thank you, Faisal, for summarizing what has happened over the last 6 months in our business verticals of corporate and institutional banking as well as commercial banking. What I would just add with what Faisal said is that given the credit parameters in play and especially the ongoing pandemic scenario, not only at home but also all around the globe, because it has its direct influence on the cross-border trade as well as the domestic economy for a developing nation like ours, we would be remaining very cautious in terms of underwriting the transactions that we do. And especially for the time being, we're not looking at an aggressive credit growth, but at the same time, we want to reassure our tested clients, and you know who you are, to know very well that Prime Bank's door is very open, wide open for you. We are here with you for the last 25 years, and we shall continue to be partnering with you going forward as well, as we have supported over the last 6 months during this roller coaster ride. Cross-selling is another area where I must mention that the corporate institutional banking as well as commercial banking division have been successfully holding hands or shaking hands with the cross counterparties within the bank, especially consumer banking and MSME banking division. So that is something where we want to foster this going forward much more and see some results, some further good results coming in over a period of time. And on the stimulation package distribution side, Faisal has already mentioned that we have disbursed roughly about 71%, which is exemplarily good in the market. And the rest, I believe, is awaiting central bank approval at the moment. So they will also be disbursed anytime. And cost minimization with regards to the deposit mobilization is something that as a PAN bank, the strategy is going forward to do that. I mean, we want to bring our cost of deposit down. We want to raise more of CASA. We have raised bar for all business verticals with regards to bringing in more and more of CASA so that, you know, we bring in the operational efficiency, bring in the operational cost further down. I'll get into that much later at the presentation once I would like to give you a summary remarks from my side. I request my colleague, Head of Transaction Banking and Structured Finance, Shams Mohaimin, to give us some highlights on.
Thank you, Rahel Bhai. Dear viewers, a very good afternoon. I will extend overview of transaction banking and structured finance and their performance for H1 2020. So we'll start with cash management side of the business. During H1 2020, our wholesale bank deposit book has made a growth of 9% to 5.9 billion taka. As strategized for the year, it is our core focus to grow our book through driving CASA, thereby changing the composition of the book from high cost to low cost deposits. We are constantly repricing deposits and also broad-basing relationship across segments to avoid concentration risk. To become core transaction bank for our customers, we are constantly developing our core payment and collection infrastructure and solutions. As part of this endeavor, we are launching our payment solution available in the country in one portal, accessible through desktop, laptop, tab, and mobile phone. The solution includes interbank and intrabank fund transfer, direct debit through electronic fund transfer network, tax and VAT payment solutions, bulk pay order and corporate check printing at clients' desired printing locations, bulk salary payment through bank and MFS accounts. We believe this solution will pose us as operating account bank for our clients. If we can go to the next slide, please. Now, I'll come to the trade sales part of the business. We start with export. We have seen decline in RMG export throughout the country during the second half of 2019. The trend continued in 2020 and deteriorated further due to outbreak of COVID-19. Despite countrywide decline in growth, our growth has been consistent during Q1 2020. But COVID-19 took its toll during Q2 with sharp decline in export. During the month of April and May 2020, the export fell to $103 million from $287 million registered in the same period of 2019. But the good news is the subsequent month of June 2020, export bounced back to approximately in the same level of the month of June 2019. And the provisional data of July 2020 shows that the export is at par with what we have done in the same month of 2019. Next slide, please. Okay. On the import side, we have a degrowth of around 35% between H1 2019 and 2020. First quarter of the year decline occurred due to a couple of external factors. The economy suffered gradual slowdown from the second quarter of 2019. During that period, we have seen decline in RMG export, fell in price of major commodities, increased trend in FX rates, increased gap in balance of payment, and increasing trend in local currency borrowing rates. These forced slowdown in the requirement for raw materials and capital and machineries. Due to de-risking, we had to let go a number of relationships and their associated throughputs. As like export, the biggest hit came in the import throughput due to COVID-19. China being our biggest trading partner, it is generally a practice of our customers to open import LCs before Chinese holiday. This year, the New Year holiday of China and the outbreak of COVID-19 coincided, and China got into lockdown. This affected the entire supply chain for us. The first COVID affected our sourcing country, and then it got transmitted to our buying countries of Europe and America. As a result, our import side suffered. April and May 2020 saw the worst of the months, losing import throughput of $319 million compared to the same month of 2019. This has dragged the overall import volume of H1 2020. However, import in June 2020 rebounded and continued in the same pace in July. So we are expecting that from now onwards, the volume will continue to rise. Next slide, please. On the remittance, in 2020, we grew our remittance throughput by 58% to $573 million. Driver for this growth has been largely from commercial remittance. However, wage-based remittance has remained steady. In order to boost our wage-based remittance, we are working relentlessly to digitize the process for enhancing customer experience. We're hopeful to launch our own online banking platform for remitters in Singapore this month. And this we will subsequently replicate in UK and other geographies in future. Can you move to the next slide, please? On the counter guarantee business, it has remained steady. The flow disrupted during the COVID months, but now what we are looking at is increased growth in the throughput, and we are hopeful that by the end of the year, we will be at par of what we have done in 2019. And on the structured finance side, market has been a bit slow at this point of time. So we are constantly looking for new deals, but our main focus is to conclude the existing deals that we have in hand. So that's it from my end, Rahul bhai.
Thank you, Shams, for summarizing all the things that have happened and are in the pipeline from transaction banking and structured finance side for the first half as well as for the later half of the year. At this point of time, I would request our head of treasury, Mr. Matiur Rahman, to make a few comments with regards to the views that our treasury division has with regards to the market. Matiur bhai, over to you.
Thank you. Thank you, boss. Assalamu alaikum. Very good afternoon. I would like to share treasury views on Bangladesh Forex and money market during the quarter half yearly, H1 2020 and future market outlook. Money market was liquid in Q2 of 2020. We didn't see any interest rate volatility in the interbank money market, and rates were hovering around 2.75 to 5%. In fact, there was a sufficient liquidity in the market due to reduced of CRR 1.5% and a slow credit growth. Although there was a liquidity stress in the first half of 2020, first quarter of 2020, as market was sufficiently liquid, a good number of borrowing banks shifted their stance and decided to reduce their borrowing from central banks at a higher rate. That is, repo rate was 5.2%, but market rate was 2.75 to below 5% to maximize their benefits and reduce their costs. As a bank, our philosophy is to remain always strong in liquidity management, but without compromising banks' earnings and following risk management guidelines properly. In line with bank strategy, we tried our level best to invest our risk-free government securities for short tenure as well as term placement with banks who has the sound financial strength and reputation and ensure good return in the in H1 in 2020. Let me share what will be the future market outlook. We don't see any probability of liquidity stress in the next 2-3 months unless BB discontinue the liquidity support in the form of repo facility or any other unexpected regulatory policy changes come into effect during that period. Regarding foreign exchange market, let me share some points. Interbank forex market was stable in H1 in 2020. Bangladesh Bank has brought huge amount of USD from commercial banks in Q2 also to help keeping in countries foreign exchange markets stable. Although the same period, we have seen that import payment has dropped significantly, mainly due to the COVID-19 pandemic and time extension of import payment maturity. During second quarter of 20, there was a decline trend in export earnings, but recorded significant growth in wage remittance, despite having global challenges due to COVID-19 pandemic. Forex market may be a little bit stressful if export earnings keep up its declining trend, as there is a huge LC payment in pipeline, which will start from mid-September 2020. However, I strongly believe that Bangladesh Bank will continue the support like as before to remain stable FX liquidity in the market as before. As Bangladesh Bank is now holding more than USD 37 billion FC reserve, which is ever highest in history of Bangladesh. Thank you, sir. Thank you. That's all from my side. Thank you, sir.
Thank you, Bhai, for summarizing your comments with regards to the market and its probable movement over the next few months, having the ongoing pandemic scenario at the back of our mind, and how the forex market as well behave going forward. Thanks for your comments. I would request now, Najmul, are you putting up the presentation slide? Yeah.
Yes, it's for MSME.
I would request now my colleague Syed M. Omar Tayyab to give us a bit of highlights with regards to the MSME banking division, what has happened over the last 6 months of 2020.
Thank you, Rahul Bhai. Very good afternoon to all our viewers and Eid Mubarak as well. Next slide, please. So as you all know, 2020, first half of 2020 was very challenging for the economy as a whole because of the COVID-19 pandemic that have really hurt the MSMEs across the world. In fact, in Bangladesh, it hurt really bad. Previous slide, please, Nazmul. Previous slide, please. First slide. Yeah, thank you. So from the very beginning of the pandemic, we from Primebank tried very actively to reach out to all our borrowers on the support requirements. We have extended the EMI deferment option in the very early stages of the pandemic, even before the central bank's regulation in this regard. We've also extended the validity of the limits so that the borrower can access their limits and can enjoy their facilities without any interruption. We're also very actively trying to disperse the loans under the stimulus packages. And we have, as part of the regulation of central bank, we have reduced the rate to 9% from April 1st. Through all these concerted efforts, despite there was severe challenge to keep the book at the par level, we have managed to somehow keep the book in the similar position of December 2019, though we have slightly witnessed a degrowth of 1% in the deposit book and 5% in the loan book. Recently, as you have heard from our CFO's statement, Central Bank is coming up with lots of initiatives in terms of the policy intervention. Recently, they have introduced a credit guarantee scheme for the cottage, micro, and small segments under CMSME, as well as the loan classification and provisioning rules have been significantly relaxed for CMSME segments. So these two policy changes, along with our strength as a bank in the MSME domain, since we have established a very strong supervisory credit framework over the last 4 years, we think that we can tide over this impact over a period of time. Next slide, please. As I said earlier, we are one of the fastest moving bank in implementing the stimulus package loans. Till July, we have already disbursed loans to around 800 customers, valuing around BDT 50 crore. And we have also sanctioned another 1150 customers, which will be disbursed gradually. So we are regularly directing our countrywide network to procure more customers under the package. All this have been done through taking the technological advantage that Primebank have. We have enabled our relationship team, our credit team, and our operations team to work from home so that they can cater to the needs of the thousands of the borrowers through electronic exchanges of the documents without physically visiting the customer's place or even letting the customers to come to our place. We have done it digitally. Next page, please. Next slide. So currently we have taken some strategic initiatives to remodel our MSME business. At Primebank, we believe that we can build a different future for MSME banking, and we want to lead the transformation. Basically, we want to see MSME is a blend of fintech's agility and the dynamism of FMCG industry's distribution and reach. So one of our signature initiative is to undertake industry, trade body, and cluster alliance, through which we will drive MSME banking in a very structured manner. As part of this initiative, we have already formed alliance with all the 5 trade bodies representing the information and communication technology sector of Bangladesh. They are namely Bangladesh Association of Software and Information Services, E-Commerce Association, Internet Service Providers, Association of Call Center and Outsourcing, and Bangladesh Computer Samiti. All these trade bodies represents all the verticals that are crucial to drive the government's vision of digital Bangladesh. Not only you have formed alliance, but also you have so far dispersed around BDT 5 crore taka loan through these alliances. Now all these are unsecured loans and new to bank customers in our bank. In fact, this is the first bank, we are the first bank in Bangladesh that have implemented such comprehensive strategy in MSME banking. And our effort has been widely acclaimed by the government high-ups, trade bodies, and media as well. This initiative will be extended further to make and will make alliance with more industry verticals going forward. Next slide, please. We have taken another initiative. We call it platform banking. We have formed alliance with e-commerce marketplaces, namely Daraz, Askeddeal, and PureShop.com. Through these alliances, we are planning to digitally onboard clients, and we want to enable payments and score-based lending for the merchant of those e-commerce sites. Basically, through this, we will drive down the cost of deposits to a lower level, as well as cost of operation to a lower level, as well as we can filter the risk upfront so that we can address three major areas: the cost of deposits, cost of operations, and the cost of delinquency. Because we have to make our business thrive and growing in the 9% rate regime. Also, we have partnered with our wholesale banking team, and we have already planned the sectoral penetration of large supply chain of the large anchors of our book. Through all these initiatives, we would like to continue our journey to become a financial supermarket for all MSMEs, and we want to be the preferred MSME bank for our country. Thank you so much. Over to you, Razvan.
Thank you, Toyab, for summarizing what has been happening in MSME space. Just to add to Toyab, I mean, for Prime Bank, as we have been telling you for the last few quarters, and as you all know that we have been trying to shift our strategy and accelerate further on MSME space as one of the growth areas that we identified a couple of years back. We took some time with regards to laying down the process, system, people, and platform. And just when we were ready to accelerate in big way, unfortunately, this global pandemic hit, and it also hit Bangladesh very badly for the last 4.5 months. But given the changes in the parameters and given the changes or the influences of this pandemic, what Toyab has just mentioned, that we are not kind of going away, or we are not taking any backseat going forward. What we intend to do, we have kind of shifted our strategy. We have done some alternative measures. We have come up with some creative ways of doing things in MSME space. One of them, as you have seen last couple of months, we had been tying up with some of the verticals within the ICT sector, which we think has got immense potential over the times to come. There will be many more going forward over the next few months that you'll be seeing that MSME would be showing their agility and in terms of creativity as well. Because we have to bear in mind that operating expenses, and this is something that I want to highlight during my summary remarks, is that the lending rate cap that we have, and especially on the MSME business, given the acquisition and management costs related to that, it's very difficult to stay afloat with the 9% interest cap. But we are trying to find a new way of doing business, and where we can still make money and still make remain afloat, and that's what MSME has been doing. The next summary remarks that we want to hear is from the Consumer Banking Division. I request my colleague, Mr. A.N.M. Mahfouz, to take us through that.
Thank you, Ralbhai. Good afternoon, Eid Mubarak, and Assalamu alaikum to all the viewers. In H1, consumer banking registered positive growth in most of the areas. Major indicators showed traction, though the external environment remained extremely challenging. If you look at the overall numbers, In Q2, consumer banking deposit grew by 322 crore, and in H1, we have registered a growth of 299 crore. Though in Q1 2020, we saw a slight decrease in overall consumer banking deposit portfolio, mainly due to large-scale legacy scheme maturity. However, through our all-out effort, we have managed to address the declining trend and have posted a growth of almost BDT 300 crore, 299 crore to be precise, at the end of H1 2020. Focus on CASA, which is our low-cost deposit, has led to a consumer banking CASA deposit growth of BDT 197 crore in Q2 and BDT 95 crore in H1, respectively, despite the ongoing COVID situation. Due to this growth in CASA portfolio, cost of fund for consumer banking deposit came down from 5.74% to 5.51% in June 2020. Consumer banking deposit now comprises of 59% of total bank's deposit, and the total deposit of consumer banking stood at 13,356 crore as on 30th June 2020. In H1, total 19,000 new CASA customers were onboarded in the bank. Payroll deposit grew by 60 crore net in H1. Total 3,000 plus new payroll customers were onboarded in H1. Average salary disbursement per month for payroll customer increased to BDT 110 crore in H1 compared to that of 99 to 100 crore during 2019. In H1, we have issued 10,000 plus new debit cards to our customers. Next slide, please, Najmul. Though we are passing through extremely challenging time due to the ongoing COVID-19 pandemic, despite that, we have taken multiple initiatives to ensure safety and convenience for our staffs as well as for our customers. Just to mention few, we have tried our best and ensured safety for our customers and staff by strictly adhering to WHO guidelines and by implementing cleanliness and safety measures across all branches and our ATM network. We have enhanced our ATM withdrawal limit to BDT 1 lakh taka for regular customer and BDT 2 lakh taka for Monarch customer. We have enhanced the daily e-commerce transaction limits to BDT 200,000, which is 2 lakh taka per day for our customer. Introduce e-commerce transaction capability through Monarch debit card. Introduce free self-registration process for Altitude, which is our internet banking platform for our customers. Ran few deposit and promotional campaigns for our customer in 4 leading online medical stores and 5 leading online grocery stores. During H1, tied up with more than 350 renowned merchants for 0% EMI program, and also tied up with almost 300 plus lifestyle stores for special discounts through online transaction for our customers. Next slide, please. Now, if we look at our the business performance of Monarch, our priority banking segment, Monarch deposit grew by 61 crore in Q2 and 118 crore in H1 respectively. Monarch deposit portfolio crossed 1,400 crore in H1. On the product development side, we have introduced insurance protection scheme for all our consumer loan product, that is personal loan, mortgage, and auto loan. We have introduced 13 types of no-frill accounts as an initiative to comply with financial inclusion initiatives of Bangladesh Bank. We have revised and implemented new schedule of charges for our customers to increase the non-funded revenue earning for the bank. On the process re-engineering or development side, which has been a continuous initiative in consumer bank throughout H1, we have introduced express loan for payroll customers. Now, payroll customers maintaining salary account with us can avail personal loan within 24 hours from the time of application. We have digitized the loan routing process through eDoc platform and reduced loan file processing tab significantly. Also digitized and automated charge document preparation and fill-up process and created significant convenience for both customers and our sales staff. Next slide, please, Najmul. Considering current COVID situation, also to adopt post-COVID new normal work environment, we have introduced credit card bill payment facility through BEFTN and bCash for our credit card customers. We have also changed and digitized the process flow of card check processing and easy payment plan processing to accommodate post-COVID new normal limited scale branch operation, and also introduced Islamic insurance facility for Hasana credit card. On the alternate delivery front, we have introduced BTCL bill payment facility through Altitude. 12 lakh plus cash withdrawal transactions were done through Primebank ATMs network amounting 1,122 crore in H1. 82,000 e-commerce transactions amounting BDT 36 crore were done in H1. 1,73,000 transactions amounting BDT 238 crore were done using our Altitude platform in H1. Call center handled more than 2 lakh calls in H1. And we have launched Altitude Internet Banking web and mobile app version under unified platform. And finally, as a recognition to all of our efforts, Primebank has won the Asia Money Best Digital Banking Award, mainly for the launch of Prime Digi, the first ever digital savings account in the country, along with other major digital initiatives that has been going on throughout the bank. That's all from consumer banking side. Albai, thank you.
Thank you, Mahfouz, for taking us through the journey of consumer banking space over the last 6 months. As you guys have already, everyone could have a feel that automation or digitization has been one of our biggest priorities in all verticals of the bank. I mean, previously, Shams mentioned with regards to transaction banking area that automation or digitization has been one of the focus areas to create more of convenience, to bring in more efficiency, to bring more speed for our customers, be it wholesale bank clients or be it our consumer clients, and as well as MSME also as a part of their business strategy. They are aligning themselves more with fintechs and trying to create more of efficiency with regards to their business area. Just taking a cue from what Mahfouz mentioned at the very end of his presentation with regards to winning Asia Money's Best Digital Bank Award. I mean, that's not the only one. I mean, I wanted to keep it for the end, but I think this is the time when I should mention it, that H1, amongst all the negativities all around us, for the bank, for Primebank family, we have the pride to share with you, and the biggest good news that we have been sharing over a period of time, that we have been accoladed with 3 major global recognition awards, coming in from Euromoney for their Excellence in Leadership Award in Asia for 2020 for our very swift and formidable responses to the ongoing pandemic scenario. And mind you, we were the only South Asian bank amongst all the banks in South Asia who stood out alongside global giants like Citi, HSBC, and DBS in terms of representing South Asia in the Asia region for that category. We have also been recognized by Global Finance as the best bank in Asia Pacific from Bangladesh for year 2020. And as Mahfouz mentioned, that Asia Money, which is another major award-giving body, they recognized us as the best digital bank in Bangladesh 2020 for the introduction of the first digital savings account in the country. And this is something like, as always, we thought ahead of time. I mean, central bank introduced eKYC just a few months back, but about a year back before from that, we introduced this digital savings account with digital onboarding in play, with the mechanism and the convenience for the clients to enjoy. The next summary presentation that we will be hearing is going to be from my colleague, another Deputy Managing Director and Chief Risk Officer, Mr. Tawhidul Alam Khan, with regards to the risk management for the bank. Over to you.
Yeah. Thank you, sir. Assalamu alaikum and Eid Mubarak to all. In terms of risk management, the Primebank has taken all out efforts basically to assess the bank's current risk management system on a priority basis to deal with the pandemic threats and vulnerabilities. Due to COVID-19, that pandemic risks is one of the vital risks. The bank has changed the risk portfolio quickly. And Primebank the prudent management has chalked out a plan to monitor and manage all possible risks considering the new normal situation. And necessary amendments are ongoing process by replacing the traditional risk management approaches for ensuring governance, risk management, and compliance issues, including all core risk areas of the bank, which has already been told by fellow colleagues, Mr. Habib Bhai and Faisal Bhai, Mahfouz Bhai, and others, and also our Honorable Managing Director. If I see some sort of highlights of credit risk management, the asset quality of 30th June 2020, that NPL ratio 4.21%, NPL coverage ratio maintained 129%. And we see the regulatory highlights, some sort of highlights has already been told by Habib Bhai. And we are highlighting some sort of, in risk point of view, that extension of repayment period of term loan and validity extension of different working capital facilities, as well as liberalization of classification rules and policy, including provisioning policy in terms of SME, and declaring different stimulus packages for helping corona-affected business organizations, and introducing credit guarantee scheme for MSME loan, along others. And mentionable that the whole credit risk of the stimulus packages is on the banking sector, which is a substantial risk considering the overall economic situation of the country. Next slide, Nazmul, please. And if you see the credit risk across the business lines, in wholesale banking risk, NPL ratio is 3.02%. And first half, we have taken some strategies that prudent management of credit risks and process reengineering and automation, de-risking trace portfolio, strengthening and automation of monitoring of covenants and other periodical reports properly, and proper management of large loan exposures along with top 20 or 25 customers, and expedite approval process of refinancing schemes under different stimulus packages, which has already been shown by Faisal Bhai that we are very much ahead regarding disbursement of stimulus packages under the Bangladesh Bank guidelines. In terms of MSME risks, NPL ratio is 10.74%. And we have taken strategies like cluster-based lending risk management, a new normal situation. It's our new policy, which has already been told by our Honorable Managing Director. And credit proposal automation, sub-delegation and credit proposal authority to CRM hub. And we are planning to establishment of new CRM hubs in business alignment to reduce turnaround time to better service for our clients, and introducing simplified credit processing system as well. In terms of consumer finance, there are so many steps taken, which has been told by Mr. Mahfouz. And NPL ratio in consumer finance is very tolerable, 7.57%. And strategies taken in the risk management point of view, the management of portfolio at risk, PAR analysis, that we have taken it very seriously, so that in this pandemic situation, we can manage our portfolio with proper guidance on the CRM level, and also business unit together, they are working for management of PAR. And digitization of collection process, we are planning, and we have already taken some sort of initiatives to digitalize the collection process and increasing efficiency and turnaround time reaction. Next slide, please. In terms of operational risk and other sides, if we say that operational risk management, Primebank is efficiently managing the workplace disruption risks under pandemic by running major operation, remotely simplifying processes supported by secure digitization. Primebank was one of the first responders in adopting appropriate business continuity plan to ensure uninterrupted business operation ongoing disaster caused by COVID-19. And our bank is transforming to the next level digitization, properly aligning with the new normal by ensuring and strengthening cybersecurity measures to protect sensitive data and operational losses. If we say the asset liability management risk, which has already been mentioned by Habib Bhai, CFO, and also Mathur Bhai, that despite of market volatility in last couple of years, Primebank has been able to maintain steady liquidity base, and also bank has specific contingency plan to efficiently address liquidity crunch. And lastly, we know that anti-money laundering is a very vast and vital area for banking sector at this moment. So if we see the money laundering and terrorist financing risks, the Primebank has already introduced a comprehensive sanction screening system, introduced politically exposed persons, influential persons screening system, and advanced media screening and own negative list. And also introducing Primebank Limited trade-based money laundering guideline, risk management guideline, which has already been introduced by Bangladesh Bank recently, and Primebank is the pioneer in this case, that they have already taken initiatives and already circulated the guidelines and already trying to implement within September positively. And also implementation of new directives issued by Bangladesh Financial Intelligence Unit, BFU Bangladesh Bank, on AML and CFT activities. That is the new circular and master circular issued by Bangladesh Bank, replacing the earlier master circular. It's a very vital changes of the circular, and we are taking initiatives, e-learning course and other digitization process, how we can implement this immediately under the prudent guidance of the management. And lastly, the implementation digitization process of AML CFT activities in Primebank. We are implementing the total digitization process among the all level of branches and employees regarding AML and safety activities in Primebank. Thank you. Thank you. I'm over the Honorable Managing Director. Thank you, sir.
Thank you, Toit Bhai, for giving us the flavor of how we have been managing our risk in all aspects, be it the credit risk or operational risk or trade finance, AML risk and other risks, or information security risk. I request our Chief Operating Officer, Mr. Abdul Halim, to make some comments with regards to what has been happening in the operations area for the H1 2020.
Thank you, sir. Good afternoon, everyone, and good afternoon, the viewers, all the viewers, and Eid Mubarak to all of you. Nazmul, if you can put on the slide, I would like to run through quickly through the slides.
Halimba, just allow me 2 minutes.
Nazmul, can you put on the slides?
Yeah, please.
Yeah.
Halim, can you?
Okay. Yeah, right. Thank you. Go to the next slide. I just like to give all the viewers a brief idea about our operations division. We have 320 members strong operations team in Primebank Limited, based in Dhaka and Chittagong, and who are led by a set of skilled leaders. One aspect we like to highlight is that in the H1 2020, as far as operations is concerned, in the processing of all the transactions, we had zero error in financial transactions and zero fraud, and due to that we had zero operational loss. That portrays that we have very good risk control setup and monitoring mechanism in the operations area of the bank. We have six departments in operations division, the largest being trade services division. Then we have liability operations department, where all the centralized account opening happens for the bank, both consumer and corporate. Then we have cash management operations department, which basically support all our corporate customers with their various transactional needs. Then we have centralized clearing department for the entire bank. It is done centrally. And we have treasury operations department. And lastly, we have cards and ADC operations. Next slide, please. Okay. Before I go to this slide, I just like to mention for the benefit of the viewers that as far as operations is concerned, they support all the verticals, business verticals of the bank. That is our division and our corporate and commercial banking division. And we remained undeterred by the pandemic. By that I mean that all our processing continued, and we continued to serve our customer every day during this lockdown period without any interruptions. None of the customers had to wait for the processing of their transactions, and we did that like a normal time with speed and accuracy for them. And whenever they approached us for processing any transactions, we processed it either from office or from home with accuracy. And we adopted a mix of work from home and work from office model. And that, in fact, approach gave us safety, health and safety benefit to our colleagues and customers both. And that was also appreciated, as in our earlier senior members mentioned by the international agencies, and our MD sir also mentioned that. Some of the highlights of H1 2020, the key strength we have, like in our trade team, we have one of the best trade teams in the country. In that team, we have about 140 plus members, and 22% of the team members have internationally recognized certification in trade skills and in and then we also processed $150 million wage earners remittance in H1 2020. And another feature is that from Singapore and London, we have our exchange houses, Primebank's exchange houses, and from there, wage earners can send money to any Bcash or Primebank account, which gets credited instantly. And if it is destined for a third bank, that goes on the same day and gets credited on the next morning. So that is that benefit you are offering to our wage earners in the major labor markets abroad. And we also offer one-stop service for our wage earners. This we recently introduced, to open account, to open an FDR, to buy dollar bonds, etc. from Primebank. They can do it through our exchange houses, and we have they do not have to go to various branches. We offered their service from a central department. And another strength we have is that we have fully centralized accounts operations to serve any customer from under one roof. During this lockdown period, we served our customers for their various account-related necessity, even when some of the branches we had to keep closed. But that did not disrupt in providing our services to the customers. Next slide, please, Nazmul. Next slide, Nazmul.
Just a second.
Slide 3, please. Yeah, right. Okay. Thank you, Nazmul. Our focus for 2020, I like to clarify or mention to our viewers, is that we are continuously trying to go green and go paperless as far as possible. We are digitizing vouchers. We are trying to save papers, save pages. Earlier slide, please. Earlier slide. Nazmul, earlier slide. Yeah, right. Keep it here, please. So we have taken initiatives to save 500,000 pages per annum, and that we are going to launch that. We are going to introduce that automation within the month of September. So by next month, we will introduce that automation, which will save us 500,000 page annually. Earlier slide, Nazmul, please. Yeah, keep it here. Keep it here. And in trade area, we are digitized. And another automation initiative is we are digitizing for better serving the customers. And another focus in 2020 is we will strengthen our work from home capability, that we eminently tested during the lockdown period, and that we will further strengthen in the coming months. And we during this lockdown period, we work from home with the help of our with very able help from our technology team. We closely worked with them, and they supported us, not in the operations. They supported all the corners of the bank very ably, and that is a valuable support we received from them. And we processed all sorts of transactions, did account opening, or process payments by maintaining controls. And another point we like to highlight is that, and we will keep our focus on, is supporting our corporate clients in processing RNG workers' salaries given under government support scheme. And I like to conclude by saying that the operations team of Primebank Limited is fully capable and ready for even higher business volume once the full economic activities are restored. So thank you, everyone.
Thank you, Alim Bhai, for summarizing the journey for H1 with regards to our operations division. All the presentations, Najmul, right?
Yes.
We have covered almost all verticals. So
Yes.
before we conclude, I just want to put in a few of my summary remarks just for you from all my colleagues who have so far been presenting from different verticals of the bank, be it on the business verticals or from the risk and operations side. First presentation from our CFO, that the H1 results, we took a brunt on the top line numbers, as well as, for the reasons that are very well known to us. The Q1 numbers showed promising figures, and we were kind of beating our budget, and we registered a very good growth over the Q1 from the past year. But unfortunately, the Q2 numbers have pulled down the H1 numbers, and that is primarily one is for the lending rate cap that came into play for 1st of April of this year. And at the very same time, it somehow coincided with the ongoing COVID impact. All the businesses came kind of in a standstill between the months of April and May. And we are slowly seeing some progresses with regards to the business, coming back to the momentum, but it's still by far very low comparatively from any time that we used to think as normal. But we have learned one thing over the last 2 months, which is the new normal. I mean, amongst many other jargons that we have learned over the last 4.5 months, new normal is the most common one. And the new normal, if you ask us as of today, is how to live alongside Corona. Because Corona is not going away very soon, as we understand from different section of specialists making comments. So if it is here to stay, we just can't let our business to stop, and we just can't let our revenue to keep falling. That is applicable not only for our bank, but for each businesses all around the country. And we have seen very timely initiatives taken from the Honorable Head of the State from the month of April by giving some of these programs, which are very exemplary ones, in terms of giving financial stimulus packages being distributed by the banking sector through central bank as an intermediary. What we have started seeing over the last 15 to 30 days, just about a month from now, some of the business momentum gathering back. I mean, we have seen 2 Eid festivals during these last 4.5 months, and the standstill nature that we had seen in 2.5 months back during the Eid that we celebrated right after the month of Ramadan, and the Eid that we just celebrated 2 days back from now. There is a clear indication that people or business, and the good news is, in terms of our textile and garment sector, we are also seeing some momentum. We know, we have seen from media reports and everything that $11 billion orders have kind of come back to the country, which were put on hold before. So these are all good signs for the export-oriented industry, especially the textile and garments, which has been a backbone with regards to our export business. At the same time, we are seeing very good momentum on the digital space or in the ICT sector space, both for the domestic market as well as for the export market. We have seen some progress with regards to the jute export. We have seen some positive numbers with regards to a couple of other export areas, though relatively much lower in numbers than textile and garments, but still these are positive factors. The very good news that we are seeing, and which has also been reflected in the monetary policy also, that the public spending will be much higher than before. And what government is possibly trying to do through some public expenditures, create more jobs, more employments, more works all around, and the mid-market players whose business were severely impacted over the last few months, to create some momentum for them, create the scope and opportunity, and enable them to do more business going forward. So these are going to be the change makers most possibly. But at the same time, the COVID is here to stay for a while. Until we all get vaccinated, none of us, I mean, the fear is not going to go away from our head. But is it going to make us sit back at home and do nothing? No. As a bank, what we are doing, as you have heard from us before, that we adapted ourselves with the new normal, and we started having almost roughly about 30 to 33% of our people coming to the branches or to the front offices, or actually coming to the offices. And the rest of the employees from Primebank family have been operating or working from home. Now, in the new normal, we are trying to figure out, and we have come to a potential number, a notional number, where a section of people going forward will be working from home without compromising on the service quality or the deliverables that they have. Now, how that is going to help us in general is basically reducing our operational expenses. As you all have seen, the top lines have fallen. So what is left for us to do is to bring in more and more operational efficiency, as well as with regards to the operational cost optimization. For the last 1.5 to 2 months, mind you, the relentless effort that we have put in is with regards to the cost optimization. And we have started seeing some action points being implemented, and going forward over the next 6 months, with the suggestions and guidance from our honorable board members as well, we are going to implement lots of cost optimization initiatives in play. One of the major areas that we have learned in the new normal, as I was saying, that if I'm working from home, then I don't need an office space or a premises. So we would be releasing more and more of our office premises. And that would be reducing one of the major cost area, which is the premises expenses. So what I wanted to reassure you is that given the new normal, given the pandemic impacted business scenario, as well as given the lending cap on all sorts of loan products except credit card, and the credit climate, as our risk management colleagues have also highlighted, that the credit climate is not very conducive as yet. As we all know, the pundits also are projecting in that way. We are not going to stand still, rather keep working on the other side of the thing, which is the expenses side. And mind you, I'm sure you must have noticed in our presentation from our CFO that other than the donation amount, our expenses in terms of operating expenses line was much lower than the past year. So it's nothing new that we have been doing. We had been controlling our operating expenses, and we will continue to do more and more of that. So this is an area where we will be focusing more for the next 6 months. And at the same time, very selectively, as I said, in the wholesale banking space, we're open and wide open, with our doors wide open for our tested clients, and whom we have been relentlessly having a journey for the last 25 years, and grow more on that space. We're not going to let any of the good opportunities of very good quality credit risk transaction go away. We would be underwriting that and distribute more and more through our structured finance division, bring in more cost-effective solutions for our customers in the wholesale bank space, bring more efficiency with regards to the automation or digitization in the transaction banking space for our wholesale bank clients. We would be bringing more efficiency and more kind of different unique propositions which the market has not seen before possibly with regards to our MSME business. And Tayo mentioned in his summary presentation, we have started thinking like a fintech rather not like a bank anymore. Same applies for the consumer. We would be thinking primarily as a fintech and then try to bring it within the parameters of banking norms and stuff. And that is exactly what we are going to see more and more happening in consumer space as well. The risk management will always remain alert, be it information security risk, be it operational risk, be it credit risk. The hats are going to be double hatted or triple hatted. I mean, we are going to wear more and more risk hats and try to dissect through each possible potential risk that we may foresee going forward. So no compromises on that area. Our operational team is ready, as you have heard from our Chief Operating Officer. We are ready to withstand any kind of pressure. More of automation, more of efficiencies, more of process reengineering is happening in that space as well. So lots of exciting things happening. Just don't get kind of upset with the numbers that you have seen for the H1, which is primarily the Q2 figures, which has brought it down, as we all know. And we know the reasons, and that is not only us, that is what has happened all across the market, and especially in Bangladesh private commercial bank market, as we hear from our peers. So the biggest good thing is that we are a very resilient bank. We have a very resilient family all around, the Primebank family, starting from the board to the lowest denominator in the bank. And we have our plans in play. And you'll be seeing things changing as you have seen over the period of last 25 years. We have always pioneered in different ways and will not let you down. We'll continue doing so. And inshallah, the next quarter, we'll be coming back with some better pictures. And it's a roller coaster ride. We all are in together. And you are our financial partners. You are our stakeholders. We just want you to brace your belts and just be with us. And inshallah, we shall overcome this in no time. We foresee this thing impacting us for next maximum 12 months, but no, it could be much sooner than that. If some of the things that we are working on rightly plays in, we should be kicking back very much in the Q1 trend of 2020 within no time. That's all from our side for the time being. I believe today being one of the general holidays going on for the press media as well as for the international market, we still don't have much of questions to answer at this point of time, but we will be responding to each of the questions that will be arriving at our counter, and we'll directly respond to those. Thank you very much from our side to be with us today once again for the earnings disclosure of H1 2020. Over to you, Najma.
Thank you so much. So I just have a couple of questions with me. I mean, if you allow me, we may ask, or because we've already, we're quite close to the end of the session. It's been 2 hours. Would you mind taking one or two?
Sure, why not?
Sure. One of the questions that has been asked a couple of times is what is your RMG exposure in terms of funded and unfunded at this moment? And also from the same person, it actually came from the FI. In light of recent loan classification circular, can you please share your views on year-end profitability, provisioning, and subsequent capital plan?
For the first part of the question, I would request Faisal to respond to that, our exposure in textile and garments.
Just give me one minute. I'll just check and confirm that.
Sure. By the time Faisal is getting back to us with that response, I request Habib, CFO of our bank, to comment on the later part of the question.
Yeah, thank you so much. On provisioning side, I believe that the question is like the central bank has given a circular not to degrade customer class starting from January 2020 till September 30th September 2020. Uh, the thing is that Prime Bank is, in terms of making provisions, we are following the customer's payment behavior. We have been a little bit more conservative. So based on customers' payment behavior, we are making provisions. Even a customer's class may be UC as per those Bangladesh Bank circulars, irrespective of payments, we cannot make any customers classified. We are making that customer unclassified, but on conservatism principle, we are making provisions for those customers. What I say, based on their payment behavior. Uh, yeah. So and in terms of income recognition also, we are kind of following same principles. I mean the payment behavior of the customer, not the classification deferment till 30th September. Thank you so much.
Thanks, Habib. Faisal, would you like to comment on the first part of the question now?
Yes, the total exposure in terms of percentage is about 27% RMG and textile. And if you're talking about the limits, we have about 4,127.83 million BDT.
Thank you. Just to add to what Faisal commented on, I mean, we understand where our FI partner is coming from with regards to the risk point of view. I mean, as you have heard from our risk management colleague, the chief risk officer, that from the very beginning of this COVID pandemic outbreak in China, we had been very closely monitoring each and every textile and garment clients that we have. And it's not only applicable for textile and garments. When we have had our industry classification being made, and especially with regards to the textile and garments, we had been following the trend, the buyer's movement, how the supply has been impacted, how the buyer, the global brand demand has been impacted and everything. And that is an ongoing thing. So we are very closely monitoring their business flow. We're not only talking to the CFO, we're not only talking to the CEO, we are also talking to their supply chain team members as well from within their companies. So to have a 360-degree view of what's happening. So the risk management side is going to be very strict and very robust, as we have highlighted before. And with regards to the provisioning and the other part of the question, as Habib has very eloquently already mentioned, and that is our stance. We are not, as you know, that central bank has allowed none of the accounts to be classified till month of September. But in terms of provisioning, what you have seen till H1, we have used our judgment with the client's repayment behavior in play for last 6 months or more. So we are going to remain conservative with regards to the provisioning policy.
Yeah, if I want to add, Rahul, right, the other part of the question was like on capital plan
Yeah.
for the banks. So, the pride factor for Prime Bank always is that on capital side, we maintain kind of highest capital adequacy ratio in the industry, and which is significantly higher than the requirement. 18.31% is CAR, and what I said in our presentation also, out of this 18.7%, 11.29% is Tier 1 capital. And considering the credit environment and everything, as we don't see very aggressive lending growth environment is there on net basis. So we are quite confident that we'll be able to maintain our this leading positions on maintaining capital moving forward also. So thank you so much.
Thank you, sir. I have a couple of questions, but I believe that we have already answered almost all of them. Just to ask the last one, banking industry is asking a risk guarantee, especially for MSME financing, to implement government stimulus package. Now that Bangladesh Bank has provided the risk guarantee, how have you planned to invigorate MSME disbursement?
Tayo, would you like to comment on that?
Yes, I can comment. Thank you, Rahul. Yeah, that's a very timely initiative, the central bank's policy with regard to the credit guarantee scheme. Initially, this is very limited to the loans that we give that we are giving under the credit stimulus package loans only. And that is also limited to mostly to manufacturing and service sector. But this will help because overall the risk climate is not good. So if we get this kind of guarantee from the central bank, this will definitely help. And we are planning to make use of the fund very soon. Thank you.
Thank you. With this note, I believe that we are just closing the session. Thank you everyone for your time today. And as we have said earlier, that due to the COVID-19 situation, we have organized this session virtually, and number of followers from Facebook and also our FI partner have joined with us today. So with this note, thank you everyone for being here, and I'm closing the session. Thank you.